Hi, this is Nilus Mattive for Money and Markets TV. Just in time for Independence Day, investors and market watchers have seen quite a fireworks display. From talk of a new double dip in U.S. real estate, to broader signs that the American economy could be headed for recession again. Meanwhile, there's a lot of concern that recent events in Greece are foreshadowing America's future, as our own debt time bomb keeps ticking away. For anyone at or nearing retirement, these concerns are especially troubling. After all, the very thing you need is safe, steady income. Yet the bond market now looks more dangerous than it has in decades. Interest rates remain near historic lows, which means CDs and money market funds continue to pay practically nothing. And the last thing you want to do is risk all your money on high-flying stocks only to watch the market crack again. Fortunately, despite all the doom and gloom out there, I do think there's a great way for you to secure the kind of reliable income you need. Income streams that can continue growing no matter what happens next. And best of all, these income investments are as American as apple pie. Yes, America's current affairs are a mess. Our government has piled up so much debt that it's at least as large as our country's annual gross domestic product. But in spite of what's happening in Washington, corporate America is sitting on the biggest cash hoard in its history. And what are they doing with these massive piles of money? They're handing it out to their investors. Now, I know that a lot of people are wary of investing in any kind of stock right now, even the ultra-conservative companies. But they're making a huge mistake in my book for several reasons. First, while many other investments are offering pitifully low yields, many blue chip stocks are boasting annual dividends worth 4%, 5%, 6%, or even more. Second, unlike fixed income yields, which never rise, these dividend payments have a strong tendency to increase over time. That gives you built-in inflation protection and means you end up receiving more and more income as time goes by. Third, the extension of favorable tax rates on dividend payments only gives executives further incentive to continue paying out cash to shareholders. And it also means your payments are worth more after Uncle Sam takes his share. And fourth, it's been proven time and time again that dividend stocks hold up far better than non-dividend stocks during market downdrafts. In fact, some of my favorite dividend superstars have been producing average yearly returns of 25%, 40%, up to 45%. I repeat, those are average annual returns from relatively conservative American companies. These are companies that I have been recommending for years now, the kind of firms that I'm telling my own father to buy for his personal retirement account. And they remain my favorite investments even with all that's happening in the world. In fact, a drop in the stock market only means you can secure higher yields from these companies. Meanwhile, given their piles of money and their tremendously long histories of increasing dividends, I consider them as solid as any income investments out there. It all boils down to this. In an environment where governments around the world are going broke and interest rates are likely to stay near zero, the only way to gain income independence is by going where the money is. And right now, I'm proud to say the money is still right here in America, with some of our nation's most recognizable companies and their investors. I'm Nilus Mattive for Money and Markets TV. Thanks for watching.